What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, March 5th. Alright guys, Tesla stock here today down $14.50 a share, minus 7.16%. It is down a few more pennies after hours. As always, volume is typically very low after hours, so always take it with a grain of salt, whether it's in your favor or going against your current sentiment. This move today, however, of course, coming off the back of some slowing shipments in China, perhaps some concern of price cuts, additional price cuts. You know, of course, for context, we do know that the holiday in China fell in February, so that's worth considering. But let's focus in on the data at hand here. Let's focus in on the charts as we head into tomorrow, Tuesday, and try to pull as much bias as we can out of the market from the volume profile, the chart itself, psychological levels, self-fulfilling prophecy levels to watch tomorrow, and let's see what we can pull out of the options chain. So let's do it. Let's start here. What I want to start with on Tesla here today is let's kind of dive in slow with our daily volume profile analysis ritual on what I think is the best chart to do it on, the 5-minute chart. By the way, if you're new here and you have not done so already, please subscribe to the channel, and I'll do my best to continue to provide you with value every single day. Now, here on the 5-minute, you guys know what I'm looking for, right? I'm always looking for big changes in volume that correlate with a big move in stock price. But again, I think that's where most people stop, and for me, that's not nearly enough. We have to look at this through the lens of what is contextual at that particular time of day. Do we expect that already, so it's really not out of the ordinary at all? Or is it higher than what would make sense based on the average around that time of day? So this being a little bit more of a trend day, I'm of course interested of off the open, this downside sustained move through about 2/3 of the day, and then of course I'm interested in looking at this bounce and then fade into the close. Okay, now just for context here again, if we typically look at the volume profile, it's very common to see a little bit of a U shape, right? Where the open is a little bit higher, we dip down midday, and then we increase a little bit into the close. So contextually speaking, off the open, you know, if you're in chat rooms tonight, you're looking on Reddit, StockTwits, whatever, it's highly likely that you see a lot of bears looking at this and saying, you know, wow, did you guys see that insane move on huge volume off the open? And while it was not a small move by any means, for me, compared to the volume that followed, I think it's relatively contextual. I mean, what do you guys think? Let me know in the comment section. For me, I'm not really willing. Now, if this were 8 million shares off the open, you know, that would dwarf the remaining volume on the day, and I would have to look at that and say, okay, that's more definitive. The bears clearly were overwhelmingly, the sample size was massive off the open. And while, of course, they won the price movement off the open, I'm not really willing to look at this volume profile and say, okay, a massive sample size of the market drove that movement. For me, that was kind of contextual off the open compared to the volume that we got the rest of the day. Now, the rest of the day, this kind of grind downside that we have, kind of bouncing off the 9 EMA, I'm sure we saw some scalpers trading those little pull-ins. For me, you know, Tesla was more in play today than any random day, of course. For me, that's not something that I would personally like to trade. I was very preoccupied today with setups that in my experience have quite a bit more edge than something like this, you know, blue chip moves off of an EMA or something of the sort. But I'm sure we saw some scalpers scalping little rejections off the 9 EMA. Okay, but during this move, you know, I'm interested to look at the volume, and I'm looking at it, and it's extremely consistent, right? I mean, like really, we get to this point where we kind of start to bottom out on the move. And that's where we really got the increase in volume. So I am looking at that and kind of considering that. Okay, we got a little bit of an increase, you know, 5 bars in a row, 5 red bars in a row on a very small scale. I mean, please don't take this literally. On an incredibly small scale, you could almost look at that as like the capitulation point of the day because it was just nearly the bottom. We just barely bottom ticked below there. But this was really the start of the sideways consolidation and somewhat of a recovery into the close. So I am considering that volume increase there. It's a little bit out of context, okay? But then into the close, I mean, this is as contextual as you can get for me. The bounce upside you know, for me, not really definitive enough volume to point that out really as something to pay attention to. But honestly, guys, I'm really interested that this is kind of the only thing that I'm even really pointing out tonight on Tesla, because given the nature of the move today, I would typically expect that you would see much, much more of a kind of capitulation point on the day. And we just never really got that. It was very consistent, all things considered, volume, which, you know, bears, I think ideally, maybe we would have wanted to see a higher volume region up here, maybe in this range as we move down lower, and consistent volume as we move lower that exceeds what would be contextual. However, that's not really what we had. We kind of just had consistent volume throughout the day with this one little pop here that isn't really even all that worthwhile. So an interesting little volume profile analysis here today on Tesla. It's very interesting on a day like today to see this, dare I use the term, normal of a volume profile. Let's move on now and start looking at contextual self-fulfilling prophecy levels that I'm paying attention to here on Tesla tomorrow. Listen, on the 30-minute chart, this downside move, for a lot of you bears, for example, when we see big pops in a stock, I oftentimes say, like, I want to see these self-fulfilling prophecies, psychological potential barriers get up underneath the move as quickly as possible and add a psychological barrier. And in that scenario where the stock moves upside, that 50 period, for example, on the 30-minute chart, which is the quickest moving that we're going to look at, getting upside quickly just adds that downside, you know, potential psychological protection. So bears, in the very same way, and bulls, we'll talk about what we're kind of looking for here as well. Bears, you ideally tomorrow would want to see this 50 period heading downside as quickly as possible and adding a potential psychological barrier. Again, it's just one factor of many, but adding that to the move, kind of getting us a lower ceiling up above that downside move as quickly as possible. Bulls, what I'm really looking for on the 30-minute here tomorrow is ideally I'd want to see this 50 period kind of flattening out and not getting down toward like 190 in a single day. That would be my ideal scenario. Leave some room here so the stock can potentially look to make a bit of a recovery with as little psychological issues as possible. Okay, that's really what I'm looking for here on the 30-minute. A little bit different from most days, but we have to take each day as they come and then look at, okay, what will be the best scenario for each side? And by the way, I think it's really important. I know it doesn't feel good, but it's really important, arguably more so, to understand the other side of the trade than it is to understand your own side. Because we all know why we're taking a particular trade, why our sentiment is one thing. Understanding the enemy, so to speak, is the hard part, the part most people skip, and I think the most crucial piece. Now, let's move on here to the 4-hour chart and take a look. You know, honestly, guys, we saw that channel on, we were talking, you know, last time we covered Tesla here about this channel here on the 4-hour, and we continue to respect that 200 period as a resistance, okay, but we now gave up the 50 period. So really moving forward here, bulls, I think we're really going to want to see a reclaim of that 50 period. Ideally, it is less than 5% away. It's 4.9% away, so that is well within range of a one-day move for Tesla. I mean, let's be honest, right? We have seen crazier things out of the stock. And bears, ideally just continuing to see a curl downside on the 50 period to again add another psychological barrier, like a potential ceiling from a psychological perspective here on the 4-hour chart. But bulls, a high volume, ideally, a high volume reclaim of that could really get us set up to truly claim that most important level of $200 a share, which brings us to the daily chart, which is, in my opinion, the most important, the most contextual, and I think has the most eyeballs, almost undoubtedly, on any day, on any stock in the entire market, which sets up the most obvious picture. Okay, so a few things here on Tesla. Number one, this 177.50 to 180 region has been a level we've been talking about for a long time on Tesla. Any downside test of that, ideally bulls, you know, wouldn't really want to see that, but any downside test of that at all, high volume bounce and pull away back upside, get away from that region as quickly as possible on as much volume as possible is what bulls would want to see. But ideally, before that would occur, bulls, we've seen this 190 to 190, 175, kind of, I'm going to call it 190 to 192 region, act as a support in the recent past. Ideally, we would get back up and hold 190 as a support level moving forward, again, on high volume ideally, or anything above average volume would be great. And then we could look to potentially use that 190 area as kind of a floor, a trampoline, so to speak, to bounce and make our way back up toward that huge psychological level of $200 a share. Bears, really simple for you. You ideally want to see a hold below 190, kind of claim 190 as a resistance level, and ideally fade hard off that level down toward that area of 177.50 to 180 that you guys are probably looking to crack downside. Now, let's take a look at what was the options traders bias here today. This is all just from today. Look at this. Look at this bias. This is actually really interesting. This was all today, how they're positioning themselves heading into tomorrow, Tuesday. So we have 2.3 million total contracts traded. That's a great sample size. 1.44 million calls and 868,000 puts. That is a heavy overall bias to the call side. And if we break this down by time frame, that gets even more interesting. The 0 to 20 delta range, that is going to be the short-term speculators on average, right? Those cheapy, far out of the money, speculative kind of gambly style calls and puts. Also leaning heavy to the call side, 624,000 calls approximately and about 320,000 puts. Listen, as always, very important, make sure your risk is managed. The options traders can of course be wrong, but that's what this big sample size is telling us here today, you know, how they're positioning themselves as we head into tomorrow. Listen, if you got value out of this video, please, again, subscribe to the channel. I greatly appreciate it. I will continue to provide you value every single day for free here on the channel. I appreciate you guys, and I'll see you tomorrow.